Hey, and welcome to the TradeUI options tutorial. Should I play penny stocks with option sweeps or a breakout scanner? That's kind of up to you, but you can still do option sweeps to follow the penny stocks. But the issue that you come across is the liquidity. Now, you have big tickers that move multiple dollars and they pass multiple millions of dollars of money inflow and outflow on a given daily basis, but you might not get that with a penny stock. You might be buying into a move that's going to happen, but are you going to be able to liquidate? The issue with penny stocks is the liquidation. Now, in options, there's a lot of tickers that really don't get a lot of volume in the options chain in itself. So you're running the risk of getting that lack of liquidity in that regard. So if you're playing, you see a great play that, looks like it has a lot of potential to move down or up, I would recommend doing a share play on it over an option strike. Even though you might get more from the option, you might have a hard time liquidating that particular sweep and that particular strike because of the lack of the liquidity and volatility of that move. You also might be getting a little stuck on these spreads. The spreads are generally going to be bigger between the bid and the ask for the lower volume sweeps, the lower volume option chains. They're not recommended for penny stocks. You can still do them because some might have some good volume, but determining whether that liquidity is there is the most important thing. You can also follow the breakout scanner through the TradeUI platform if you want to consider that, because it's pretty much similar concept. So in the after hours in the pre-market, you see a stock moving up or down significantly. You can grab some quick shares and scalp some quick profits. Might be $5 to $15 here and there, but if you do it 5, 10 times, that's 50 to 150 bucks just there in the course of an hour if you have that kind of capital to play around with, especially on the penny stocks. And that's about all I was going to cover in this video. I just wanted to emphasize that penny stocks are considered significantly more risky, not only through the standard of you got the implied volatility crushes and all this other stuff and the theta decay, but the fact that the liquidity just isn't always there. So always make sure to check when you're entering an options play that there is liquidity involved, especially when it comes to penny stocks. Thanks for listening in, and that's about all I wanted to cover in this video.